please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, well, the big story that we're tracking at the moment, sources say that LIC is in discussion with the government to pick up stake in IDBI Bank. As bizarre as it may sound, and of course, this is not a solution to the problem, but let's find out more. Kritika Saxena joins us to tell us what she's picking up. Kritika, over to you.
Well, at this point in time, we understand that they are in conversation. Yes, the government and LIC are talking to pick up some amount of stake in IDBI Bank. Now, it is unknown the exact quantum, but we understand that LIC is open to a significant minority stake. Now, let me just remind you over here, LIC already holds about 11% odd stake in the company. So, as and all, we don't typically see 15% plus being crossed, but on a case-to-case basis, that can be revised. Even if you look at LIC strategy, LIC has so far not taken up a controlling or a majority stake yet. So, yes, there are conversations at this point in time, but the conversations have just been presented to the Investment and Strategy Committee. Now, as per the proposal or as per the procedure of LIC, the Investment and Strategy Committee has to first clear a deal, go through the negotiation, go through the valuation, etc., and then present it to the board. So, reports of the board clearing an initiative or likely talks are incorrect. We understand that this has just been presented so far, and it's in very exploratory stage. So, it's not going to happen anytime soon, but yes, it is in talks, and the quantum we will know only in the days to come.
All right, Kritika, thanks very much for those details. Let's shift focus to other news coming through. We understand from sources that 16 lenders are looking to sell about 44,000 crores of non-performing assets. Ritu Singh has more on this one. Ritu.
That's right, in an unusual move, because usually you see lenders lining up to sell their bad loans towards the end of the financial year. But this time around, because of the stress on the balance sheet and the urgency to clean up and, especially faced with a lot of delays and resolutions that are for cases that are currently undergoing insolvency proceedings, a lot of large banks have come out and put large portfolios on sale. Largest of that lot, of course, is IDBI Bank with about 21,000 crore rupees, followed by Bank of Baroda, about 7,407 crore rupees, and several other state-run banks. And the common theme is that a lot of NCLT cases are featuring on this. So one of the indication is that banks are perhaps dissatisfied with what they're seeing in IBC and would rather prefer selling these loans to asset reconstruction companies to recover their dues. The total quantum, as I mentioned, is about 44,447 crore rupees. But the key point is that pricing remains a concern. So whether or not they are able to offload all of these loans to ARCs or other institutions, that remains to be seen.
Okay, Ritu, hang on. There's another story that you're tracking. The RIL JM Financial ARC Consortium has got that nod from the Committee of Creditors for their proposal for Alok Industries. So what's the latest that you're picking up there?
Well, as we reported yesterday that Reliance Industries and JM Financial ARCs was the sole proposal, and that was being re-looked at by the lenders. And now we understand that that proposal has received the required 66% vote and more from the COC, which means the resolution stands fast. Therefore, Reliance and JM Financial ARC Consortium will be acquiring majority stake in Alok Industries for 5,050 crore rupees. This is coming at a huge haircut to lenders. I think the repayment to lenders is close to 4,000 crore rupees, compare that to about 29,000 crore rupees of debt that the company has. So it is one resolution that is gone through, of course, pending NCLT clearance, but at a huge cost to lenders.
All right. Ritu, thanks very much for that. The standard disclaimer, of course, that Reliance Industries owns and operates the company which owns CNBC TV 18. All right, with that, let's shift focus to the other stocks which are buzzing in trade. Sonal is here with a roundup. Sonal.
Thanks a lot for that, Sumera. Well, Som Distilleries is one stock that is buzzing in trade today because the company has received approval for manufacturing IMFL, that is Indian-made foreign liquor, for one of its subsidiaries in Karnataka. And the company says that it expects to commence the commercial production of IMFL by next month. Other stock in focus is Astra Pharma because the company has received important market permission in Form 45 from the Drug Authority of India. So that is positive for the company and the stock is buzzing in trade. Let's move on to OMCs. They are in focus ahead of the crucial OPEC meet in Vienna. But apart from that, there's one more news as the monthly throughput numbers have been reported, and BPCL has processed throughputs and has grown this number by around 24% on a YOY basis. HPCL, however, has seen a decline of around 0.4% on a YOY basis, and IOCL has been able to process throughput and has been able to show a growth of around 0.4% on a YOY basis. All these stocks are in focus as well. Back to you.
Okay, thanks a lot for that. So those are a couple of stocks in focus. But you know what? A lot of corporate or a lot of people from India believe that the capex cycle has picked up, especially private capex cycle. Bharat Forge is buzzing in trade after positive commentary coming in from the chairman and MD Baba Kalyani. In fact, he did speak about capacities running full and a lot of companies investing money now to raise their capacity. Let's listen in to what he had to say.
We are beginning to see people running out of capacities and therefore adding capacities, putting in capex. So we are beginning to see this across many sectors. We ourselves are started our own capex cycle, expanding capacities, because we are running almost in many areas to full capacity. So yeah, it is beginning to happen. I think overall picture in the economy is good, the demand is good, the growth is good. So I don't see why the capex cycle won't pick up. We are setting up almost a 400 crore expansion out there, and that will increase our revenue, overall revenue in 2 years by almost 1,000 crores. And we have orders to cover that kind of revenue. You know, there is no let up in growth. We see growth coming in many different directions. Even the defense sector is beginning to generate business for us, both in India as well as abroad. And in the next few years, that sector will generate a lot of growth for the company.
All right, let's take a very quick break. Well, the market is moving into the green, to the frontline indices at least marginally higher now. We'll take a quick break, come back with lots more in a bit. Stay tuned. Hi, welcome back. You're watching Halftime Report. Well, it's the end of the week, and you know, this week actually, compared to the rest of our Asian peers, our market itself has escaped with just about a half cut in terms of losses. A lot of individual stocks, though, have felt the heat this time around. But then on the plus side, we have something like an ICICI Bank. Even these OMCs have done well through the weeks. And of course, the key trigger now for the OMCs remains what comes through in the OPEC, and that's something that we'll be monitoring through the weekend. But let's bring you a CNBC TV 18 exclusive. My colleague Mangalam caught up with the recently appointed CEO of VIP Industries, Sudeep Ghosh, to talk a little bit about the company's strategy now with respect to individual brands like Carlton, Aristocrat, also Skybags. So let's hear out what the plans are.
As an organization, we want the segments, like I spoke, which is above 6,000, to become very strong, and we would like to at least triple the revenue that we get from Carlton in our fold. It's a product that we are very confident. We took about 2.5 years to get the proposition right, and we have launched a product now which we are very proud of, and we say
it's being received well.
It's been received very well. We are actually run out of stocks.
All right, triple your revenues from Carlton in the next 3 years.
Yes, definitely.
All right. Let's talk about the sub 6,000 Aristocrats and Alphas. That would account for what, 8 to 10% of your revenues, and that would triple as well?
Again, as I said, I'm not going to give you numbers, but
more than that, less than that?
That has a far more or far bigger potential to grow.
Okay.
I think currently that the growth of those brands are in excess of 40%. That's big for us. The bases are big, and the kind of plans that we have, we think that is going to be the next big thing happening to our organization. We just need to ensure that we keep the costs down.
Skybags, you've been very instrumental. I am told that you were the brain behind Skybags, and you decided the whole backpack range, and whatever it is your brainchild. So let's talk about that. That contributes what, about a third to your total revenues?
Yes.
Right? And going forward, what is the opportunity? Will this be the majority contributor to your revenue, say, in the next 5 years?
So when I took over, we were mainly a luggage brand,
Okay.
almost a luggage brand, and Luggage, as you see, consumers, when does the consumer buy your first luggage? The first luggage consumer buys when the person is around 28, 29, 30 maybe. Not when the person gets the job, because when you get the first job, you still take your parents' luggage and travel. So the consumer is getting into our business at a far later stage of life. And that is the time when he's already exposed to multiple brands, multiple multinational brands available. So we had to get the consumers at an earlier stage. Now, backpack was the very, very important category. It was like, when the moment we started getting backpacks in, we brought down the average consumer age from, say, 45 down straight to 25.
How big is the backpack market, the organized and the unorganized market?
It's huge. Nobody knows. I think it's bigger than the luggage market.
The organized market?
The organized market currently would be about 750 crores maximum, not even 750, not more than. So we would be more than 50-55%. So I think the organized market would be what, 600 crores now.
Growing at?
I have no idea. Trust me, because we are growing at 50%.
Okay.
Okay, even at that range. Everybody around you has a backpack, right?
Absolutely.
Whether it's a school kid or people who goes in a bike. So the moment we launched backpacks and rucksacks and the casual bags, we brought the average age for our organization, the consumer age of our organization, down from maybe 45 to maybe 25. That helped. So if you give a good product to a consumer, and if he buys it at a young age and he has a good experience, possibilities that when he needs a luggage, he would probably go back to you or come back to you. And therefore, Skyback plays a very important role for the consumer to come back to VIP Industries when the person gets a luggage. So the way I see Skyback as a brand is, I want in this brand the short haul, which we have in our parlance, we have long haul and short haul. Long haul is for the long haul travel. Short haul is for the short haul travel. The short haul should contribute to at least 50%. When I took over, there was no short haul at all. Currently, we have about 40% of Skyback turnover coming out of short haul. We would like that to become at least 60%.
Okay, that's the word coming in from VIP Industries. But let's move on. Tata Motors is holding its first ever Jaguar Land Rover Investor Day. We will get you details of what to expect on the other side of this quick break. So do stay tuned in.
Hi, welcome back. You're watching Halftime Report. Tata Motors will be in focus. They're holding their first ever JLR Investor Day. Sonia, this is a stock that you track quite often. I mean, you track. Are there big expectations for this one?
There are big expectations because this is the first ever Jaguar Land Rover Investor Day that's being held in a very long time. And it is the initiative taken by the new management. The new CFO, Mr. P. Balaji, has been very active in increasing shareholder disclosures, giving guidance, capital allocation prudence, etc. And in that context, this is important. Now, this is a platform for shareholders and investors to meet all the Jaguar Land Rover business vertical heads at the Castle Bromwich plant in UK today. They will talk about the electric vehicle foray, the cost cutting that they plan to do, the capital allocation policy, etc. Remember, they have outlined a margin guidance of 8 to 10% on the EBIT front for Jaguar Land Rover in the medium term. They also plan to detail how they could meet that guidance going ahead. So because of these increased shareholder disclosures, it's something that the street has taken very well. The stock, in fact, has been moving up over the last few weeks or so.
All right. Also, a lot of, in fact, today was a day where we got a lot of interesting brokerage notes, actually. Abhishek has been pouring through them since the morning. Abhishek, what does your tally look like?
Well, Sumera, we have a whole bunch of lists, right from IT to banks to GAIL. So Macquarie has written on L&T Info, wherein they maintain the outperformance rating with a target price of 1,800. They believe that the revenue growth trajectory for FY19 looks very strong, and the ramp up in 7 new clients' logos has been performing really well. Macquarie has again written on microfinance, and they had earlier initiated coverage. So they like Bandhan Bank and Ujjivan, both of them. They maintain the outperformance rating with a target price of 560 on Bandhan Bank and a target price of 490 on Ujjivan. CLSA has written on GAIL. They maintain their buy call with a target price of 405. They say that the trading margin on unsold long-term LNG may boost the EPS by anywhere between 3 to 26%. And they also mention the fact that valuations look attractive at the current levels. The Jefferies has written on Tata Steel, wherein they maintain the whole rating target price cut to 586 and versus 614 earlier. They maintain that the company may adjust deal terms given the decent divergence in margin trends. Nomura has written on SBI Life, wherein they maintain a buy recommendation with a target price of 880. They say that the risk reward is better now as the valuations have corrected 20% from the IP business margin to be 18% plus for FY20. Morgan Stanley has written on various mid-cap IT companies, and their top picks are Cyient, Mindtree and Persistent. Back to you.
All right. Okay. Thanks a lot for that, Abhishek. Well, let's get in some market opinion. Earlier today, we did speak with Saurabh Mukherjee of Ambit Capital, who suggests to move to large caps away from mid caps and small caps. Listen in.
The market looks quite invincible because of the strength of domestic flows, and SIP flows are now consistently clocking $1 billion a month. So domestic flows make the overall market invincible, but there's clearly stock price pressure as well. And I think this trend continues. Market cap migration from small and mid caps to large caps, and in particular sectors like I think IT, pharma, I think FMCG as well. Even though it's expensive, I think those sectors will pull away market cap. But this migration away from small and mid cap, I think, will continue. Optimism on pharma stocks is the earnings momentum hasn't been there. Pharma is a sector which is fundamentally dependent, like IT services, on the rupee sliding. And the rupee hasn't slid for 4.5 years. I think the slide in the rupee, and quite a big slide in the rupee, I think is overdue. If the rupee punches through 70, Indian pharma stocks will do extremely well. I think more rate hikes are on the way. I simply don't believe that the RBI can only do one more rate hike in the next 7-8 months of this fiscal. I think there'll be another rate hike 3-4 months out. So we've begun the rate hiking cycle. Wholesale money market rates have tightened by 130 odd bips in the last 6 months. The 10-year bond yield is up 140, 150 bips in the last 12 months. I think that the cost of money rising cycle will carry on. The question is how quick will be this rise in cost of capital. Hard to calibrate, but net, I think the totality of evidence suggests that we're in that part of the cycle where demand is doing well, economy is doing well, but the cost of capital has started rising, and hence in the fag end of what's been a super bull market for Indian investors.
Okay, well, let's get back to the markets and talk about the technicals then. Prakash Gaba and Mitesh Thakkar join us on the show. Well, Prakash, let me start with you. It's flat for now. The mid-cap index is slightly under pressure. But what about individual stocks? What are you looking at?
I look at two stocks, and both on the long side. I'll start with Can Fin Homes. Very good chance Can Fin Homes can see a climb to maybe around 365. So it may take a day or two for that. Looks like in the lower regions there is support of the Can Fin Finance. Steel Authority of India is another stock that looks okay to me. It's trying to form a base here, and possible we can see a move to around 86 zones. Maybe a day or two should be fine for that. Stop should be 82, 83. It's trading at 82.90. Just somewhere, maybe a 5-10 paise stock should be fine. 82.40 should be fine.
Okay. Gentlemen, good afternoon. Mitesh, let me come to you first on the index.
Yeah, I think I've been maintaining a range-bound bias on the index. I think that still remains. There's still no directional bias coming on the charts of the Nifty, and I think 10,700, 830 kind of range remains.
What about your stocks?
Yeah. On the stock side, Balrampur Chini is a sell with a stop at 67.5 for targets of 61, and I have a buy on UBL with a stop at 1276 and look for UBL is a buy about 1295. Then keep a stop at 1276 and look for targets of 1330.
Okay, all right. So that's the word coming in on United Breweries, a buy over there. A couple of these stocks, M&M is actually resuming its uptrend. It's getting back to its all-time high. Remember, the all-time high for M&M is 934, and today it is one of the biggest Nifty gainers, and it's now up above that 900 rupee mark. Prakash Gaba, quick thoughts here for a long-term investor. If one wants to put in some money, does it still make sense at 900, or has that boat sailed?
I think it's heading towards 1,000. It's trying to go there. May take its own sweet wait time for that. Basically, when you look at the structure of M&M, it's still a positive structure. And what we are seeing is correction. The corrections are being absorbed. There's a third correction that I'm seeing, and this bounced from a very strong support of around somewhere closer to 880 or so. So I think it's heading up.
All right, gentlemen, thanks very much for that. So let's take a quick break, come back in a bit, and up next we'll focus on the NBFC space in our hunt for value today. So we'll tell you which stock we're talking about in just a bit. Stay tuned.